No intro, just straight into it. There is a very common trap to fall into when you're looking into interesting but unprofitable companies. And that trap is the window dressing, FOMO, and dilution cycle. And that is what I want to talk about today. In this example, I want to use Ocean Sun as an example because it's very easy to see the cycle in a microcap stock. You can witness the trap in all sizes, but it's more common the lower the market cap. Now, let's look at the example. I want to start with the first phase of the cycle. It's the reality check from the financial reports. Now we're going to look at the first phase of the cycle. We're in the cash flow statement of Q1 2026, and that is where the hard reality drops. We can see that the cash flow was negative 9 million, and the total cash is 6.7 million. And that is a major red flag. It's a reality check that the company burns money and are close to needing money. And then it brings us to the next phase of the cycle. The 19th of May 2026, there was a stock exchange announcement that Ocean Sun and Silverwolf sign a memorandum of understanding. This announcement on the surface sounds pretty good, but it doesn't bring in cash immediately. And in this case, the memorandum of understanding is a roadmap to a potential future partnership. And there is a lack of potential market size or contract size or any form of hard number. And if we skip a few days ahead, on the 22nd of May 2026, just a few days after the memorandum of understanding message, the company announces they are issuing new shares at a price way lower than the stock price. Now, if we are looking at this story in the charts, we can see that the memorandum of understanding struck and volume spiked, triggered FOMO, and a few days later the dilution message struck and the stock tanked. As we can see, there is a huge period before the announcement of low volume and no activity. And then suddenly this announcement drops and the volume spikes, and it finally looks like a breakthrough. But in reality, nothing of significance have happened. It doesn't need to be a message of a memorandum of understanding, but it can be an announcement that sounds nice but actually don't bring in cash. So the company is still bleeding and are in need of money. So this is the example I wanted to talk about. So I made a checklist for myself to check for red flags in these type of stocks. And I want to share that list. And here it comes. When a stock announcement like this in these type of stocks, you want to work quickly. So this checklist is short but effective. The first thing you gotta check, it's for hard facts. Does this bring in cash in the next 90 days? And if it's not, the value is 0. You also need to check the balance sheet and the cash burn rate for red flags. You need to check how long the company lasts with the existing amount of money. If the runway of cash is under 6 months, an emergency capital raise is already being planned behind closed doors. And lastly, you can check if the management has mentioned something about exploring financing alternatives. I hope this helps spot the cycle early and reduces the chance to fall into the trap and get stuck in a stock that has low daily volume. Otherwise, check out my Patreon and like and subscribe, and I'll see you in the next one.